your intel on the Philippine markets and the economy. In the headlines, a group says exports to the U.S., especially garments and textiles, will face stiffer competition after Indonesia secures a 19% tariff rate. U.S. President Trump's tax and remittances cloud real estate prospects in the Philippines. The reasons why with Joey Bondo of Colliers Philippines. And PLDT Global, MQuest Ventures, and Philippine Airlines celebrate the heroism of OFWs in Hong Kong. PLDT Global's Albert Villarreal and Edith Kudiamat join us live. An industry group says Philippine exports to the U.S. will face stiffer competition after a recent trade deal between Indonesia and the U.S. The U.S. finalized a trade agreement this week that subjects a 19% tariff on Indonesia's exports, lower than the Philippines' current 20% rate. Foreign Buyers Association of the Philippines President Robert Yang called it a big blow to local garments and textiles, warning the Philippines has little left to offer and faces stiff competition. He told Business World the country may struggle to offer similar trade concessions, especially as U.S. negotiations increasingly weigh geopolitical factors. The government's trade negotiators will head to Washington this week in a bid to bring down the 20% tariff imposed on Philippine goods, which will take effect on August 1st. President Marcos will also be in the U.S. on Sunday, July 20th. Meanwhile, S&P Global Ratings warns that trade wars and geopolitical risks could weigh on Asia's credit standing, including the Philippines. In a new report, S&P says Asia-Pacific economies face rising threats from tariffs and military tensions, especially those with current account deficits like India, Indonesia, and the Philippines. While the Philippines holds a BBB+ rating with a positive outlook, S&P says external and fiscal risks could slow its push for an A grade. The report also flags uncertainty over U.S. trade policy and cites tensions in the South China Sea, Taiwan Straits, and North Korea as key concerns. Nomura Global Markets Research believes the Bangko Sentral ng Pilipinas could cut 50 basis points this year. That would bring the benchmark to below 5% by the end of the year. In its global economic outlook, the research firm is calling for the BSP to deliver an additional 50 basis points of rate cuts, which would take the policy rate to below neutral, 4.7%. BSP delivered a second straight cut in June, reducing borrowing costs by 25 basis points to bring the key rate to 5.25%. The Monetary Board has now lowered interest rates by a total of 125 basis points since it began easing in August of last year. Finance Secretary Ralph Recto sees growth of the economy to be less than initial target of 6% this year. In a chat with members of the media on Wednesday, Recto said he is confident that the country's gross domestic product in the second quarter may grow more than the first quarter's 5.4%. Still, he said this depends on government spending as well as household consumption. Despite uncertainties with U.S. President Trump's tariffs, the finance chief eyes a 5.8% economic growth for 2025. Economic managers last month lowered the full-year growth target to 5.5 to 6.5% from the previous 6 to 8%, reflecting a, quote, more measured and resilient outlook amid the global headwinds. Global security firm Kaspersky said that the Philippine banks and e-wallet providers face increasing threats from phishing scams. Kaspersky warns that cybercriminals doubling down and exploiting what they call the Philippines' weak digital defenses. They explained, we are vulnerable to attacks due to behavioral and infrastructural gaps, specifically due to low public awareness, weak password habits, and a continued dependence on SMS and email verification. In its 2024 financial threat report, Kaspersky reported more than 38,000 phishing attempts targeting banks and e-wallets in the country. That makes the Philippines one of the most targeted countries in Southeast Asia. Online gambling continues to generate billions in revenue, but with that growth comes calls for tighter regulation. Fintech leaders and lawmakers are now weighing in. Here's that report. It's attracted both risk takers as well as regulators. Online gambling, now seen as a social crisis far worse than banned Philippine offshore gaming operators. Yet it's still a toss-up between imposing stricter rules or banning it outright. FinTech Alliance PH isn't waiting any longer.
We have received the draft circular of the BSP, and we are really pushing for that immediate enforcement.
The Bangko Sentral ng Pilipinas proposes to limit the use of digital payment platforms for online gambling, among them placing a daily cap on fund transfers for bettors, setting a daily time window for processing payments, and a threshold for heavy usage. FinTech Alliance PH members want to add more.
We even suggested additional controls or safeguards, and one of which is really having to ban celebrities or influencers in promoting online gambling, and also having to come up with geofencing within 1 kilometer radius of schools, churches, and hospitals.
The government earns more than 100 billion pesos from online gambling, says PAGCOR Chair and CEO Al Tenco. Of the near 85 billion pesos income earned last year, more than half that total, or 48.79 billion, came from online gambling. Some of the Philippines' integrated resorts have since gone big in online gambling, diversifying revenue streams from licensed land-based casino operations.
Well, in case of growth of that market itself, maybe it wouldn't, the way the pacing it will slow down. But, as a government, as a regulator, it is very reasonable for them to come up with something stricter like regulation, because there's some kind of negative side in the society. But to me, whatever I'm doing right now is not only about online. It's about online, offline together, omni experience.
We spend a lot of time on customer segmentation and providing that the local market with an appealing product. The appealing product doesn't have to be gaming. We're trying to understand what the customers are looking for, and ensuring that we're tailoring the message to the particular customer, because it's at the forefront of what we do.
The Bangko Sentral awaits comments until July 25. As fintech players start rolling out the guardrails, the public awaits a definitive response from the government. The U.S. is the largest source of the Philippines' remittance inflows, accounting for 41% of the total. Overseas Filipino workers are a key segment of the property sector, with many of them turning to real estate for investment income. Our next guest says President Trump's 1% remittance tax from his big, beautiful bill could serve to dampen the property investing here in the Philippines by OFWs. With us now is Collier's Philippines Director and Head of Research, Joey Roy Bondok. Good to have you back, Joey.
Yes.
Welcome to the
Cathy,
program.
yes. Good morning.
Yeah, I was looking back at something you published online. I think that was in March, and you did say that remittances of OFWs are a low-hanging fruit
Yes, that's correct.
for the recovery of the Philippine
That's
property
correct.
market.
Yeah.
So what now, given the 1% tax on remittances coming from the U.S.?
Well, I think this will have a detrimental impact on the remittances coming from the U.S. Remember that U.S. accounts for 41% of total remittances being received by the Philippines. And of course, we see cash remittances growing by 3 to 4% every year. That's about $36 billion. But again, this is a huge chunk of the remittances that we're getting, those coming from the United States. But if you look at remittances right now, Cathy, and those that are receiving remittances, these households are now allocating more money for real estate purchases. Major reason why I mentioned in my previous report that the OFW segment is a low-hanging fruit. I mean, certain developers in the Philippines, RLC Residences, they invited me in Singapore, Hong Kong, Vista in Abu Dhabi, Dubai, Ayala Land in Singapore. And I really see the people, the faces buying all these residential units, whether it's a condominium, house and lot, or residential lot only. So we believe that this is a segment that will likely help revive the Philippine property market. But with
But
this
because
uncertainty,
of this uncertainty, the
exactly.
take-up now is in peril, the take-up of the verticals and the horizontals,
That's correct.
because a lot more are going to want to spend on essentials
That's
rather
right.
than on a big-ticket purchase like property.
That's correct.
So what impact would it have on the property recovery then? Are we changing the timelines?
Yeah, I think right now, Kathy, the most affected segment for the residential sector, especially the condominiums in Metro Manila, the mid-income sector. As we always say, that's the 3.2 to 7 to 12 million. So 3.2 to 12 million pesos per condominium unit. And if you look at the capital region right now, Kathy, a huge chunk of the unsold condominium units, easily about 50-60% of the unsold ready for occupancy condominiums in Metro Manila coming from this segment, 3.2 to 12 million. Note also that the mid-income segment is heavily dependent on mortgage rates. The concern is mortgage rates remain elevated. Even if the central bank has been cutting interest rates, mortgage rates still at 7.7%, still elevated. That's why we're still seeing a dampened take-up for these lower-priced condominium units
And
in
I
Metro Manila.
remember a couple of months back how we started this year was the word oversupply.
That's
Let's
correct.
take a look at and baseline that, because you've got a couple of graphs here
Yeah.
that you just gave a couple of hours ago, so
Yeah.
fresh off the laptop. What's the state of oversupply now in Metro Manila? Because this is really the biggest concern. Because we
Yes.
were talking about 8 years. You
Yes,
started out
that
with
is
that.
correct. So actually, Chorus is one of the first companies that really released these data on the slowdown, oversupply, whatever, however you want to call it. But right now, if you look at this slide, it's a record high vacancy, and we're likely to see vacancy, especially inching up in the Bay Area. Note that the Bay Area from 2017 to 2019, which was a POGO heyday in Metro Manila, we saw a lot of developers launching this mid-income priced condo units, 3.2 to 12 million pesos per unit. But again, the POGOs have left the Philippines. You have the impacts of the COVID-19 pandemic. You have elevated mortgage rates, so therefore resulting in a very slow take-up. And even for those units in the secondary market, Kathy, meaning those units have been turned over already to the buyer. And the buyer is now looking for a reseller and a buyer and someone who will lease out the condominium unit. The problem is we don't have people that will rent those condos right now, therefore resulting in elevated vacancy across Metro Manila. Although I have to note that it's not all across the capital region. Certain locations, including the Bay Area, is heavily affected by this vacancy.
Well, presumably the developers and banks would come out with even bigger promos,
Yeah.
because that kind of worked out
Yes,
over the
that's
past
correct.
couple of months in the
That's right.
take-up. But to what extent? I mean, you can only give so much promos, right?
That's
and
correct.
maybe even
So-
better payment terms, enough to entice the households with remittances to part with a big chunk
Yes.
of their shrunken remittances from the
right.
U.S.
Right now, Kathy, what we're seeing is a battle of RFOs, ready for occupancy promos, meaning developers, essentially, they're allowing you to lease a condominium unit. After 36 months, you acquire it. They are allowing you to lease out the condo up to 120 months. No hefty cash out. So these are the trends that we're seeing right now. In fact, for their older inventory, they even give up to 40-50% discount if you pay cash on the spot. So these are the promos that we're seeing right now, and we believe that this will likely be the trend. And developers are really coming up with these attractive, innovative promos, and we believe that more and more developers will follow suit.
The finance department carries a different view, saying that remittances are going to have a minimal
Yes.
dent, and it's between 19.1 million and 148.4 million dollars on money sent home.
Yeah.
That's going to be carved out of the total 36.5 billion dollars. What
Well,
do you make
yeah.
of that, and the impact that it might have in the property market and the economy?
The concern that we have here, Kathy, of course, is that if you are a remittance receiving household, you'll probably spend much of your remittances on the essentials, like tuition of your children, food and beverage, for example, health services. As I mentioned, only about 13% of remittance receiving households are allocating money on real estate. But of course, we don't want to break that cycle of increasing number of OFW households setting aside money for real estate purchases, because we saw how the property market was affected by the COVID-19 pandemic, by the POGO Exodus 2021 up to 2024. So hopefully, with all more remittances being sent home, as I mentioned, I have been to Singapore, Hong Kong, Abu Dhabi, Dubai, and I've met all these OFWs that continue to invest. After all, every Filipino's aspiration is to have his or her own residential unit. So that will continue to fuel demand for condominiums, house and lot, whether in Metro Manila or outside of the capital.
Yeah, what we're
region.
sure of is the resilience of the OFW. Just before you go, as you've seen in the previous report, the topic du jour, stricter online gambling rules
Yes.
and the impact it may have on integrated resorts.
yeah.
What do you think? Might it contain business?
I think right now, Cathy, what the government is calling for is a stricter policy on online gambling, but the legitimate operations. In our view, if you look at integrated resorts, of course, this will be beneficial for them. Of course, the government wants to ward off the underground activities, because a total ban will definitely result in the rise of these underground activities. It will be more difficult for the government to catch these illegal operators. So a stricter policy is, I believe, in the works, and hopefully this will be beneficial for integrated resorts, especially, right now, South Korean tourists are down, Chinese tourists are down. I understand that there are other markets that the Department of Tourism is trying to attract. So hopefully, these new markets, whether it's the Middle Eastern or other European markets, can help fill that void and hopefully result in a greater take-up of hotels, as well as more revenues for the integrated resorts.
Right, a lot of other revenue
Yes.
streams. Well, thank you so much,
Thank
Joey.
you,
Appreciate the
Cathy, of
insights as
course.
always.
Thank
Joey Bondoc of Colliers, Philippines. And you're watching Money Talks. Coming right up, the Philippine peso reaches a 3-week low in yesterday's close. And we'll talk about Hong Kong Fest 2025, which brought together the Filipino community in Hong Kong. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. stocks fluctuated Wednesday, initially falling and then rebounding after reports Trump was considering removing Fed Chair Jerome Powell, a claim the White House later denied. The Dow rose by over 0.5%, S&P 500 and the Nasdaq gained by 0.3%. The 10-year Treasury yields inched up to 4.45%, and gold prices ticked down to $3,352 per troy ounce, still marking gains in 4 of the last 6 sessions. U.S. futures point to a decline when the markets open later tonight Manila time. The Dow, S&P, and the Nasdaq are down by 0.1% each. Asian markets are off to a mixed start in the first hour of trading. ASX 200 in Sydney up over 0.5%, Kospi falling by over 0.6%, and the Nikkei 225 down by nearly 0.2%. And a quick check on the Philippine markets at the get-go. PSEI opening today, Thursday, slightly higher by over 0.3%, 6,358. Stock market fell yesterday, Wednesday, ending the session lower by nearly 2%. The broader all-shares index is down, and all sectoral indexes are in the red, with mining and oil leading losses. Japhet Tantiangco of PhilSox Financial said the decline came as investors reacted to higher U.S. inflation last June and the possible impact to the Fed's policy outlook, noting the data may prompt the Fed to extend its pause on rate cuts. Tantiangco also said investors took the cue from the U.S.'s 19% tariff on Indonesia, seen as more competitive than the Philippines' 20%. Let's take a look at the peso. It opens today, Thursday, a tad stronger, 57.05 to the dollar. Peso closed weaker yesterday, Wednesday, at 57.09 against the greenback. That's the weakest close in 3 weeks, or since June 25th. Tantiangco noted the peso's continued depreciation against the dollar also weighed on the market. The dollar gained strength after higher U.S. inflation dampened expectations of Fed rate cuts. The 10-year government bond yields inched up to 6.26% from the previous 6.25%. PLDT Global Corporation, along with MQuest Ventures and Philippine Airlines, mount HK Fest 2025, an annual event celebrating the heroism of Filipino workers in Hong Kong. Working with like-minded companies within and outside the MVP Group, PLDT Global's 4-day event is its biggest yet post-pandemic, bringing the Filipino community together in Hong Kong. With us now for more, PLDT Global President and CEO Albert Villarreal and Chief Operating Officer Edith Gutyaman. Good to see you both again, Edith and Albert.
Thank you.
Thank you.
All right, so how did that go? HK Fest 2025.
Oh, exciting. The nearly week-long HK Fest activity was nothing short of a resounding success. The event was filled with emotions, pride, and pure Filipino spirit from start to finish. And you could feel that from every corner of the activity, from the organizing committee to the Filipinos who attended the event. It's a testament that nothing beats a Filipino spirit, even a typhoon signal
I know,
number 3.
it was Typhoon
It
Butip.
was.
I was also in Hong Kong at that time, and then it was Typhoon 3 and 8, and
Yeah.
the Filipino spirit coming together.
Yeah.
How important is this? I mean, this is the first biggest one since post-pandemic, Albert.
Yes, it is.
Yeah, that's right. So if you look at the backstory, it took us about 4 to 6 months to prepare this for a 4-day event, right? And of course, there were a lot of, it was a painful journey, of course, because we haven't done this for a long time. But at the end of the day, I think it was a resounding success. We had about 10,000 of our kababayans who went out in the street for that main event. And prior to that, there was also a movie fest that we were showing, right? So it was really a culmination of what we wanted to happen for the OFWs in Hong Kong.
And happened it did that collaborations came through. Within the MVP group, you have MQuest Ventures,
Yes.
and also collaboration outside with Philippine
Philippine
Airlines
Airlines,
as the logistics partner.
Yeah. Well, PLDT Global, through its digital platform, Teambo, took the stage in organizing this event. And yes, with MQuest Ventures, who helped us produce the concert and also brought the MQuest artists into the event together with the Itbulaga Dabarkads and also Senator Rafi Tulfo's Action Center. But of course, more importantly, the partnership with Philippine Airlines, being our carrier, carrier partner, brought in not only the crew and members of the concert, but lifted the Filipino spirit, brought in the pride of the Filipino culture into Hong Kong.
Could further collaborations be made? I'm thinking maybe as Philippine Airlines
Yes.
flies to different destinations where OFWs are.
That's right.
So that could pretty much carry on.
we're actually doing a series of these events outside to also honor our OFWs across the globe, right? So we've partnered with Philippine Airlines to see how we can work together to bring that pride as a Filipino company, as Filipino companies outside of the Philippines.
And also as a technology company bringing an app, bringing
Yes.
Filipinos together in an app, the Tinbo app. How's the take-up coming along?
Well, Tinbo right now is nearly reaching 500,000 user base across the globe. Middle East being our strongest base. The OFWs in the Middle East, I think, around 2.5 million. We are bringing most of them into the app. And as you mentioned, a collaboration with PAL is up and coming. We're bringing in the Mabuhay Miles PAL integration into the Tinbo app very, very soon this year.
Interesting that you make a mention of the Middle East with what's gone on there, the recent escalations
Yeah.
that have also affected our OFWs. So what are you feeling on the ground there as a digital company? You're trying to bring Filipinos together at a time of strife.
I think at this point in time, it's actually very relevant that we have this particular platform out there. It connects the Filipinos outside back to their families back home. And we're trying to see how we can empower and uplift the lives of our kababayans outside, trying to make sure that this particular app will be able to fulfill most of the needs. The pain points of the journey of the OFW outside, we're trying to make sure we ease them using the digital space through e-padala vouchers, through fulfillment of I would say, let's say, a Jollibee Foods Corporation initiative, right, to be able to send that back to the Philippines as well. So there are a lot of things we're doing, partnering with banks as well, partnering with utilities, and of course, MQuest and TV5 is also in the mix to make sure that we have the content to entertain our fellow OFWs abroad.
And in addition to that, we make sure also that we address the needs of the immediate needs of the Filipinos by introducing the smart virtual number free calls to OWA 1348, to the anti-human trafficking 1343, and together with our strategic partnership groups working with the government, we are also aligning with them on how else we can expand the free calls from the overseas into the Philippines in times of emergencies and crisis.
What about in times of peace? I'm thinking about the U.S. We haven't discussed the U.S.
Yeah.
as a huge market for OFWs.
Well, similarly, the Tinbo platform is reaching also the U.S. market today, and available also a lot of services that you could reach out into the platform. The U.S. community also is can avail of the services inside the platform, the access to free calls into the government related government agencies for support.
And MVP was separately awarded the Gintong Leadership
Gintong
Award.
Alon Leadership
Alon
Award.
Leadership Award
Golden
of
Wave,
the,
right?
of the Philippine Association for Hong Kong. He did spend 22 years as an OFW. So
Yes.
what insights did he give the community there
Well,
when he did his speech?
That's very interesting. So he's been there for, over 20 years. And he is one of those Filipinos who really resonate with the OFWs. And I'd say it's one in a million to have an icon like him be able to fuel the national interests back here in the Philippines, right, when he came back. And he talked about being lonely in his speech, his acceptance speech, and how it drove him to be able to really excel. Because loneliness drives you to work harder, he said, to keep that away off his mind. And look at him right now, right? Managing all of these companies, directing all of us, right, to make sure that not just his companies would succeed, but the nation as a whole. So that was a very big moment for us when he accepted that award.
And also celebrating his 79th birthday last Monday.
Yeah, and
Yes, sir.
trivia also. Almost 50 years of the of MVP setting foot into Hong Kong in 1976.
Wow, that's a milestone.
Yeah, milestone for him. Yeah.
Well, thank you so much for what you do for OFWs. Really appreciate
Thank
the time
you.
and your insights,
Yeah,
Edith.
thank you.
And Albert.
Thank you, Cathy.
See you again.
Thank you.
Thank you.
And that was Albert and Edith of PLDT Global. That is it for Money Talks. I am Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.